Okay, good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, January 14th. We just got the release of US CPI, slightly weaker than expected. Year on year, it came in at 2.3. We're expecting a clip of 2.4. Month on month, 0.2 versus 0.3. Dollar still finding some support here. So lots of things to review today. Good morning. Hope you're in best condition, says Iman. Good morning to you, Jay, Peter, Pete, Pooja, Ziad. Great to see you all in the room. Hey, Aurelian, great to see you too, sir. So on the menu, we're going to hit DXY as always, Euro, Sterling, Dollar Swiss, Dollar Yen. I'm not doing anything on Dollar Yen. I'm just tracking this advance here. Popped over the next level, but seeing a little bit of exhaustion. Dollar CAD on the menu, Kiwi, and Gold. Do let me know if there are any other questions or trade setups you want to review. There was one setup. Oh, that was it. So let me know if there's anything else you want to throw on the menu. Here's what DXY looks like. Well, here's what it looked like earlier, I guess, in the week. As we were opening Sunday, we were coming off that upper parallel. We talked about the exhaustion trade that happened on Friday with that non-farm payroll move. Here's what it looks like now. We're still in that same exact range. Here's the non-farm payroll move. We're still within that range, just below resistance, right? So the larger resistance level, we talked about this in the webinar on Daily FX yesterday, 97.71, 97.87. That's like the max. Don't want to see much strength beyond that if dollar is going to hold this down slope. But we have to respect that threshold. You know, if it pops through, could be a game changer here for the dollar near term. Not the assumed scenario, but that's the what if. Here's the weekly. Again, to put things in perspective on where we are in trend, something's got to happen, you know, like right here. So on all different time frames, whatever way you slice it, the dollar is coming into an area of which we should see some inflection. It's either going to be a breach above this down channel, it changes the near-term trajectory to the upside, or this is going to be a nice epic failure up here. Now, we don't have much data left on the tap for the week until we get into retail sales on Thursday, I believe. But we do have the China trade deal, which is supposed to be in the works. We got all this stuff with, obviously, with what's going on geopolitically. We'll see if this offers any catalysts. But at the end of the day, the upside exhaustion in dollar is still sort of what we're looking for. Again, the intraday chart is pretty clear on this. Any questions on the DXY? Here's the 60-minute. I mean, I've been stoking this on every single time frame. It's a clean weekly opening range below resistance. Okay, now the break of the weekly opening range high wouldn't prompt a long because you have 96.62, 96.71 right here. But that's basically what we're looking for guidance. Whoops. And that's right there on slope. All right, so not much new to update about the DXY. You're basically just on the lookout for topside exhaustion into 97.71. You're on the lookout for ultimately a break of the weekly opening range lows, which is kind of what would put this back in play. But we'll see if the CPI print doesn't seem like it's gonna necessarily give any topside fuel here. Anyway, next up on tap, here's Euro. This is where the fun stuff starts. So first target or first level of support is right now, just below last week's or this week's rather opening range low and the weekly open, which is right here. This is the zone that we were talking about for so long. Here's the 120 minute, and here's what Euro. Here's what Euro looked like yesterday. So we talked about this zone right here into 111.44, a basic 38.2, but not only that, it was the really nice 75% line, right? 75% parallel of the slope was right there as well. So as I said yesterday, I'm basically looking for a reaction here. If we had popped above, that would give us free reign up into 111.80s again. Nice resistance there. You saw momentum start to fail around the 60 threshold, turn to the bottom. First area of support right here, 111.07 into 111.10. We're on that basically now, okay? If it breaks below here, The same two levels that we were looking for exhaustion last week are in play. That's 110.90, the 100% extension from the decline, and 110.79, 110.80. Essentially, this 10 pip range over the next few days carries the median line for the same slope that we just played the inflection off of. So if this breaks, you have, clear target of where we should be looking for the next sort of objective, the next reaction, the next pivot. My problem is that if this holds, which is what we're assuming here on this move, at least on this initial approach, you could start to see a little bit more of a sideways to higher move. From here, I'm flat. The move was just for that pullback. I don't want to get any extra zealous or any overzealous on this pull. We'll see if it pulls through. These are still levels of which the downside could fail. So Euro looks very interesting to me. Here's what it looks like on the daily chart. There's the significance of that key zone, which is why I don't want to really get too pent up on trying to hit that again, okay? And Euro on the weekly chart obviously came off of big resistance. Is the pullback fizzling out? I don't know. It's the weekly chart. So all things held constant, I'm essentially looking to see if this drop finds some support here. If it doesn't and it plows through this 111, it's basically 111.07, 111.09. Look at how many pivots. Don't take my word for anything, guys. Always look at the price action. Break acceleration, pivot support, breakdown acceleration, break test, acceleration, resistance, acceleration, support, acceleration, resistance, acceleration, right? This was kind of a messy pivot, but a pivot nonetheless, resistance. Here's the inflection. Look for the US Open to give us guidance. If we steady below 111 into the US Open, look for a reaction down here. Anything sub 110.80, just for the record. And we have to allot that this was a break of support, test of former support as resistance, and we have to look lower. You're looking for 110.40, you're looking for 110.20. That's the severity, that's the condition that could be met if we break these lows. So Euro's not out of the woods yet, failed at resistance. Let's see what kind of support holds on this pullback into US trade here. All right, number 3, sterling. So here was sterling last night. You guys remember 29.90? We talked about it for a very long time, on the way up and on the way down. Last week, that was kind of my stipulation. I wanted to see price hold 129.90 into the close. It did. This week we opened, dipped right back below it, and then yesterday we closed right there. So I was left itching my head yesterday. It's above slope support. It's above that major pivot in price. If it spills lower, 29 is the big zone. Remember that? That was a 38.2 off the low and a 618 off the high. Really nice fib confluence. The range lows for that December clip, like two key critical levels. Guess what? We're still at 29.90. We're still there. Here's the 240, right? This thing can't make a decision. But it is make or break here. I mean, if we dip below 29, we're going to wash out into the yearly open from last year. You're looking for 100% extension. I think there's possibility for big losses if that materializes. But above 129, this still could be broadly corrective. So I'm split here. I'm split. If you take a pistol to my head, I want to be long, but I just haven't seen the justification and price action yet, in my opinion, to pull the trigger. I was hoping for some divergence this morning. I was hoping for something into a new low. You did get a new low, but upon a second look at this morning, there's no divergence, right? Price action's making a higher low, and so is the oscillator. So you're not seeing momentum start to bear down. You're not seeing broad dollar weakness per se to try to help us jump into the long. So when all these factors are lining up, although again, my kind of gut says let's try to take a stab at this. I'm going to wait and see if we can get a better positioning, maybe the washout into 29, or if we miss that and this thing reverses, the breach above 30.97, basically Friday's high, would take us at least out of this downslope, which is now a 3-point confirmed resistance. So that's where I am on pound. It's still pending. I kind of want to take a stab at it, but we're looking for justification, either a washout into 129, or like I said, if it breaks through 131, I think at that point you can start to look to buy some dips. One thing I do want to note on this point, now that we've stretched this far from the weekly open, I always like to mark where that is, 30.34. Just keep that in your reference. It's going to clutter up the chart if we leave it on there, but just keep it as a reference. If we make it through that, the weekly opening range high is only a couple pips higher. That in and of itself would be a near-term long signal to try to get in, but we'll see on sterling. I think this one's one that we have to continue to kind of stalk. I'm not going to jump in this one too abruptly. There's just too much headline risk here. But the levels are pretty good. Let me show you again the daily chart here on sterling. Here's what we're talking about, right? Now, remember, on the daily chart, we're always focused on the closes. So if we were to remove this candle for today, we closed right at the parallel, like literally right at the parallel yesterday. So watch today's close. Watch today's close. Could be the confirmation of the break, and you're looking for 129 either way. By the way, 129 is also last month's December open, is in that range between 29 and 29.20. Yeah, there's a lot to consider here with the pound. And here's the pound, by the way. I'm going backwards today. Sorry about this, guys. On the weekly chart, we referenced this yesterday as well, that broader slope off of last year's lows. There's that 38.2. There's the swing low from December. I mean, there's just too much lined up here. Maybe it does need to make a strike one more time before we bounce. We'll see. Looking for downside exhaustion if this is going to give us another stretch higher. Sub 129, don't even try it. Okay, sub 129, don't even try it. I think at that point we're looking for the much bigger washout. So sterling and euro both kind of flirting with big levels, and I put that in yesterday's piece, just because it's a lot of these trades are coming in some pretty pivotal levels here as we get into these support zones, but we're looking for the exhaustion. Here's Swissy, another one which played out magnificently as well. Dollar Swiss, if you go to the previous update, guys, from last week, we were looking for resistance into the non-farm payroll release right here, 97.71, 97.62. Big zone, you had 100% extension, 2 equal legs, former swing lows, slope resistance, the median line for the pitchfork, all lined up right there. Man, it was a beautiful setup. Here's Dollar Swiss as it played out into non-farm payrolls. So we came right into that zone. Whoops, sorry about that, guys. My windows are a little switched up today. We came right into that zone of resistance. The high registered like less than a fractional pip below, and then we turned on non-farm payrolls. Our update last night noted that we were coming into some near-term support, that 618. Big zones of support, still 96.60 into that 96.90 region. All three of these levels, 96.60, 96.72, 96.90. This is the big support zone that we need to clear. It came just shy of that 618 last night. We finally hit the 618, drove down to the 618 extension, which is the blue one, and here's the rebound. So failure at the lows, maybe. The recovery of this magnitude back above 96.90 is something that you want to respect into the US Open, specifically if 9:30 clip, 9:45, 10 o'clock, and we're still up here. That would be a classic sort of near-term reversal pattern, guys, for a larger recovery. So just watch this. Ultimately, I do want to see the downside break, but we want to watch out if this recovery will give us a better entry for another rebound here. If you're still holding shorts on this, yeah, I see that. Break even or better if you're anything, let me take a step back. Resistance is at the weekly open now, 97.34. Okay. If you're short from last week, no, you're short from 97.10. Yeah, I mean, that's a big recovery here. We just got a data print. If it follows through, look, that's a tough call. I would be break even on a trade like that, if not better at this point. Personally, if this rebounds, I'm looking for an exhaustion. If exhaustion happens ahead of the weekly open, it might be a better attempt to try to get it lower again. If we recover through, this former swing high from overnight in Asia, this is also the highs that we made in Europe, then I kind of say take a side seat here. You could get a larger recovery, some more sideways action. Keep in mind, it's only Tuesday, guys. So the opening ranges for the week are just setting up, and we're still at critical support on a lot of these setups. So don't pre-play the break until we get that conviction. Does that make sense? You're more than welcome. Right on. So that's Swissy. No change to any of the levels. Okay, so we're going to still continue to work with this. You need the push below 96.60 to break. That's still the level to beat on the downside. Bearish invalidation, 97.63. I'd bring that down at this point, guys. Now that we've marked that 618 extension, bring down bearish invalidation to weekly open resistance. Okay, if we make it through the weekly open, that's also going to be an objective break of the weekly opening range highs, and that would be an objective long bias at this point. So we'll bring down near-term bearish inval to 97.35 on Swissy. All right. Any questions there? Okay, so next on the list, let's just take a look at the abomination for just for giggles, I guess. But yeah, there's really nothing to do on here, guys. I don't want to encourage looking at this too often because there's a lot of people are going to want to inherently chase this. It's a chaser. It's the abomination. It's what it does best. It grabs in chasers. So look, levels that we had just wanted to kind of reference yesterday were the 109.92, which is what we were trading at. That's just the former swing high, late swing high that we made back in May of last year. We actually closed basically there on the candle. Here's the extension push. The next major confluence region of resistance on the upside, still 110.50. Now we're trading at 110. It's a psychological, level. You might find some, hover action here. It might go sideways, but the next big lateral level, in my opinion, is 110.50, if not higher. That's the 764 retracement. 786 retracement takes you just a bit higher, but you have some longer term slope resistance off the highs that you made in 2018. Only a 2-point touch, so I want to stress it. But it's also the basic 764 retracement. 1 minus the 236 retracement gives you 764. And it's the upper parallel of this pitchfork that we've kind of just been tracking by eye since this advance started. Don't have too much conviction on it, but it all converges on the same zone and basically into the close of this week. All right, constructive above last year's open, which is still going to be that 109.67 level. That's still key support. Bullish inval, 109.18. Next major topside resistance, 110.50. So not much to talk about there. You do have Kuroda speaking later tonight, I believe. So keep that in the back of your head as far as event risk, but not much else out of Japan. So I'll leave dollar yen at that. There's not much to say beyond those levels. So if you're holding longs, you're just choking up your stops at this point, yeah. And peeling off as you get into those upside targets, specifically 110.50s. That's a big spot. Stops would be at 109.67 or below if you're long anything sub that. Anything above that, I'd be break even or better. Dollar CAD, number 6. Okay, so here's Loonie on the weekly chart. Okay, this extension higher push through 130.58 has me a little skittish. You guys know how we played this last week. The broader play, right, is still to look for the top side exhaustion on a bigger stretch higher. But guys, this formation has been textbook. I'm so sorry, I keep doing that. There's been no reason to fight this yet. Here's dollar CAD as it looked into the start of the week. All right, here's the Sunday open, right before the Sunday open. We highlighted 2 levels, okay? It was 30.50, 30.46, this zone right here, okay? And then it was 30.28, 30.24. And that's the 100% extension, the 50% retracement, beautiful confluence zone with the lower parallel. So into the start of the week, that was sort of the focus. We got almost there yesterday, right? It was during the webinar, we were sinking down. We didn't quite make it to the parallel, but we're talking about pips here. Recovered. Here's the first test. 30.75, which is the level that we highlighted into the start of the week, ended up being the exact 618 of the drop. That's what this level is. If I get rid of it, the same exact level. Whoop. 30.75. And we're testing that as resistance now. So as I said on Sunday, if this breaches, you're looking for 31, you're looking for 31.34. At that point, again, I would start to be looking for exhaustion, looking to short this thing for a move lower. If this holds today, you still have the emphasis on a break below 30.50 because that converges now on slope right here. So work with this formation, right? It's clean, it's been working, it's a nice change here. And dollar CAD's been, it's the only thing I don't like about it is the momentum profile has been really like kind of quiet, right? So we played this short last week. We peeled off some nice positions off that. Wanted to see a break here. It's a continuation, maybe sell a rally at that point. If we're getting the recovery and we're still holding this, basically I'm looking for exhaustion. I want to see what happens to the US trade session today. If we miss, if I don't take anything on this and this holds, a break below 30.50 puts us right back on the move. If it breaches, I wouldn't chase it, guys. If you're not holding anything on the long side here and the top side gives way, don't chase. If you're holding longs, 31, 31.34, both big levels. Big levels. Here's the daily chart. 31, that former swing low, former swing high, and the current monthly opening range highs converges on slope. And then obviously 31.34 is that low that we made back in September. Decent pivot in price, and that converges on the median line. So some clean levels. We just need to get the momentum behind it, but some clean levels on these majors. Loving it. Any questions on dollar CAD? Okay. Anyone involved in Kiwi? Here's New Zealand dollar. And here's what Kiwi looked like as we started the week. Look at that downslope. Looking for downside exhaustion. As we said, if the median line breaks, 65.68, 65.50s, both areas to look for exhaustion on the downside. If the median line holds and we breach this down channel, right back up into 67. Well, look at this. Tried to break the channel to the upside right into the open of the week, and it failed. And ever since then, resistance at channel, and here we are dribbling down to last week's low, right? Watch today. sinking below this median line puts the exact play that we talked about on Sunday into effect. You're looking for 65.68. You're looking for 65.45, both levels of which, if we get, might be a decent entry for the long side. The risk would be lower with a break of last week's low, right? And it's basically the 66 handle. So everyone's talking about big figures and all this stuff anyway. I just don't know how you would approach this, guys, on a short trade with any type of respectable stop from here. That's my issue. As I always tell you, directional bias is 50% of the game. And even if you're right, with your directional bias, unless we have a proper setup, you can make a mess of things. So watch for a reaction today. Watch for a reaction today. Ideal scenario. Again, this is just Mike Boutros, my humble opinion. Ideal scenario, if this thing holds into the US trade session and pops through, okay, 66.32 is a level that we were watching, okay? But what I wanted to note is objective of that. Where's my weekly open? There it is. Weekly open resistance 66.38. Let's work with that instead. So weekly open resistance. If we pop through this, in my opinion, that would be a clearing at least of that downside range. And we could see, at least the 75% line, if not a run back towards 67. But it needs to hold these lows. For me, a break below these lows is what would validate a break of the median line, which is what we've been sitting on since the start of the week. So that's New Zealand dollar. Any questions on Kiwi? Pooja, I like that chart. I just saw that. For the sterling, interesting. I like that wedge. What is that? It's a 240 minute. We'll take a look at that. It's the same slope essentially. They're very similar. Yeah. Sterling's definitely on the menu. All right, so that was Kiwi. Any questions there? Looking for some resolution here as we sit on the median line. Ideal scenario, you find downside exhaustion here, but again, if 66 breaks, those are your downside targets. Those are your levels to look for possible exhaustion. If we make it through the weekly open, man, hopefully we get resumption back on the upside. Aussie, I'll be putting a piece out on Daily Effects today on this. Let me take a step back. Here's Aussie on the daily chart, on the weekly rather. So we're in no man's land. We're right in the middle of a big zone. Key support, you guys know, 68.28 into 68. That's the zone that we were watching earlier in the year. Key resistance, 70.60 into 70.42. We just missed that on the last turn here after completing 2 equal legs off the lows. So from the weekly chart, there's really not a trade that kind of jumps out at you to do from here. You're right mid-range. The daily chart has us near-term resistance, 69.27. It's the 618 of the drop that you made from the high in July. Really nice pivot, governed the highs in October and November. The median line is there right now. Okay, so that's this. Let me update this for you real quick. Scratch that 38.2. All right. So we're essentially playing this slope, okay? This is the major resistance, 69.27. Like I said, that's what we need to get through to validate resumption. Near-term support, we had 68.62. I know we've dribbled well below that, on that last drop there, but I still want to keep that as a sort of a reference point at this point. Here's what it looks like on the intraday. And these are the same levels that we've been following on Aussie, I believe, since last week. Okay, this is the same setup, guys. Same setup. This is back from the 7th. So literally a full week ago, we were talking about the 618 retracement, 6860, that's support. Looking for a reaction here. It's either going to be a recovery off that slope and the resumption higher, or if we get the break, here's your downside that we're looking for possible re-entries for the broader uptrend. Well, that's sat here for 1 day, 2 days, 3 days, 4 days. Here we are, bounce into last week. Opened this week just below resistance at 69.27, 69.23. And it's been kind of a snoozer ever since, right? Since the start of this week, it's just been nothing. So for Aussie, I think, again, this is gonna be one of those ones that is pent up. You'll get a nice move on it when it finally cracks. But I like to see another stab, another pullback to get long, closer to that parallel. 69.27 is where we need to breach to mark resumption. Let me just say this, if 68.60 breaks, okay, we're looking for a move towards a lower parallel. So that's same level. And again, I know that the intraday went below that, but if you bring this into a close, we basically based right off that level. So I'm still watching that sort of inflection zone. Either way, below here, I do think you need to register a new low at that point. So either way you slice it, whatever scenario this plays out, right now positioning is right mid-week range. It's essentially unchanged on the week. I think we're up like 0.05. So also one that's on the menu, pending, keep your eye on it. Keep your eye on it. On a trade like this, I basically have an alert at 69.20, an alert at 68.80, and then, once it gets into those extremes, I just want to be around the charts to see how it plays out. Really lackluster since the start of the week on Aussie. I was hoping for more fireworks here, but hasn't materialized yet. Okay, that is Aussie dollar. Any other questions on the majors? Let's see how this pans out. Here's the DXY again. We're about 20 minutes, 30 minutes out of the US Open. If we stretch, I want to see a reaction up there. And that should be the Euro kind of drawdown. Could also be the Sterling drawdown we're looking for to get the entries. And here's Swissy with some follow through on that bounce, so watch that as well. All right, gold. Here's what gold looks like. That slope, interestingly enough, is still kind of in play. So we started the week saying look for resistance ahead of the median line if this thing is going to continue to move lower. We're looking for a new low was essentially the game plan to the start of the week. Here's what gold looked like on Sunday. We never made the climb, never made it towards the median line, and then it sunk right back below 1542, 1552. So 1547, 1552, excuse me. So look, guys, nothing's changed on this. I still think exactly what I thought earlier in the month, and that is we need to see a deeper pullback here for the gold trade. So 1535 was the downside targets at the ML. We already hit 1535. It was just, I stand corrected. The low registered at 1535.87. So not quite at the figure, but you get the picture. And the next downside target is going to be the objective yearly open. I'm so sorry, guys. The objective yearly open at 1520. I love those levels, as I always tell you guys, because it's right on point. Are you moving the charts, Michael? Oh, Iman, I thought there was something wrong with the picture. Just give me a compliment. Thank you. No, I'm not, Iman. It's just, and they're not my levels. I always tell you guys, these are the market's levels. I'm just helping you find them. This has got one thing I want to say about gold. I think this, how do I say this without freaking you guys out? I think this is going to wash out some people soon. What do I mean by that? I think it's not too far off that we'll get a decent gold rally. Everyone's going to start piling back in because you got a decent pullback. I mean, you guys keep in mind, we're basically like what, $50 off the high already in a matter of, yeah, right? Like $75 off the high already, right? 6% in a matter of days. So yeah, it could be a pretty mean rally that people start to participate in, thinking it's the resumption trade, and then that one fails to give us the new low. I don't know. All I do know is that heading into the median line right here, I'm very cautious, because if you get some sort, I mean, again, I don't. Let me take a step back. Everything that I tell you guys as far as references for behavior in price action around median lines is based on what price action has done there. So here's last time we approached this median line, really, really shallow bounce, but once we broke, look at the accelerated pop you got through. And then the upper parallel, you soared through that, but you held on a closed basis. Look when it broke, the accelerated pop you got through. Look when it broke down, the accelerated drop that you got. Suggests that this slope is an area or a slope of low tolerance. The market does not want to stay at this threshold for long. Same thing here. So for me, heading into the median line, I want to see inflection here as we hit 1535. If it's going to rebound, this would be an area of which would be a nice resumptive trade. All of a sudden, it rips higher, and then that fails near the upper parallel somewhere. Or if it breaks lower, a break of downtrend support and uptrend median line support should see the accelerated drop towards 1520, and 1509 would be a 618 of the advance. So I love the levels. I kind of like the momentum. It leaves a little bit more to be desired. Let's just say that. I've been looking at the momentum on the near-term charts. We haven't really, let me take a stab. We haven't really gotten any drives into oversold conditioning. Remember, when you're looking at charts, it's kind of the preconceived notion that you want to sell when it's an overbought and buy when it's an oversold and all that. When we look at this sort of as a reference, remember that multiple drives into oversold are healthy in the downtrend. Multiple drives into overbought are healthy within the confines of the uptrend. So we were overbought. Now the market turns. If the downtrend is taking effect, I want to start to see oversold. That gives me confidence. That gives me conviction that in fact the momentum profile is now bearish. So this was our first sort of stab into oversold territory since the turn on an hourly chart. I look for these references as well on the 2-hour and the 4-hour. Hasn't manifested yet. Just some things I want to note that I look for as far as trying to identify whether markets have actually like made the turn in momentum as well. So look lower. If this breaks 1535, that's my line in the sand. Downside targets are clear beyond that. If we make it back northbound of 1520, or excuse me, 1552, which is this zone here, the weekly open is now going to be near-term bearish invalidation. All right, and that's going to be like 1562. So if we go north of 1562, you're risking a larger resumption back into key resistance. Chill out. Don't do anything on the short side. And if we break lower from here, like I said, I love the downside targets beyond this notion. I would just, if you're holding anything on the short side, 1535 was big. I know we didn't, 1535.80 is what we just get based at, but watch this threshold, okay? Watch this threshold. It's here on the daily chart. And obviously, you guys have all seen the weekly chart for gold before too. Right? This slope is not, I leave it here on purpose. This is the same gradient of the pitchfork. Don't take my word for it. It's right there. Okay, same gradient. 1 touch, 2 touch. This was the awesome reversal trade that we had into the close of last year. Here's the break and acceleration. Look where the low just registered. Pay attention here. Okay, pay attention here. And that is gold. Any other questions? That's everything that's on my list, guys. Crude, I just wanted to point out that level that we were talking about in the webinar yesterday, 58.30, 58.60. We closed below it, okay? And here we are checking it as resistance. Pay attention. Pay attention. Here's the trade that I don't know if I showed you. I don't think I showed them yesterday in daily effects. This is a real liberal pitch for guys that I've been working with, just based on the gradient. Seems to be pretty decent still, actually. Feel free to take a snapshot of this chart, by the way, if you need it. I don't think I put this on the updates recently, but you all know where crude is on the weekly chart. You've seen this chart before, right? Yes, last week we posted an outside weekly reversal off of Fibonacci resistance. The area was the 618 extension from the advance off last year's low. I say last year, but 2018's low. And that's the 618 extension at 65.50, 56, and that's basically where this thing capped out. Okay, here's the pullback. Here's the start of this week. Here's the momentum trigger I want you guys to watch on the weekly chart. Okay, daily chart for crude looks like this. Again, beautiful area where we turned. Also was a outside day on that move lower. This is the 618. Let's drop that. This is the 50% of the rally from the October low. Near-term resistance right back up here. Risk is lower while below here. Next downside target of consequence would be the 56, the 618 rather, 56, 57. So it's not bad actually. The levels aren't bad. And that's crude for you. Okay, and that wraps up everything on my end, guys. Feel free to let me know if there are any other questions or trade setups you want to review. If not, good luck trading. Stay light heading into the latter part of the week. Watch retail sales on Thursday. I think that's going to be interesting. And then we do get University of Michigan, I think, on Friday. But mostly these critical thresholds, and specifically on all the dollar crosses. So DXY, watch 60, 97, 62, 97, 71. Here's Euro, again, the 110.90 region, 110.80 critical support. British pound, if we do mark a new low, 129.20, 129. Dollar Swiss, 97.35 is resistance. It's the weekly open as long as that holds. Dollar yen, nothing to say there. And dollar CAD, we discussed those implications as well. All right, guys, best of luck trading. I will see you on Thursday. Cheers.